Furthermore, a crash of the Silicon Valley Bank could have broader implications for the financial industry as a whole. It could undermine confidence in other banks that specialize in niche markets and lead to increased scrutiny and regulation of these types of banks. However, it's worth noting that the likelihood of a crash of the Silicon Valley Bank is difficult to predict, and there are many factors that could contribute to such an event. It's important for tech companies to be prepared for any potential disruptions to the financial markets and to have contingency plans in place to mitigate any negative impacts. Tech companies can take several steps to prepare for potential disruptions to the financial markets, including diversifying their funding sources. Companies should not rely solely on Silicon Valley Bank for their financing needs. They should explore other options, such as venture capital, angel investors, or other banks that specialize in lending to the tech industry. Maintaining healthy financials. Companies should ensure that they have a solid financial position and a strong cash reserve to weather any potential storms. This can help them stay afloat in the event of a credit crunch or market downturn. Building strong relationships with other banks. Tech companies should build strong relationships with other banks that understand the unique needs of the industry. This can help them access funding when they need it and provide a safety net in case of a crash of Silicon Valley Bank. Monitoring the financial markets. Companies should stay up to date on developments in the financial markets and monitor any signs of trouble. This can help them take proactive steps to mitigate any potential negative impacts. Overall, while a crash of Silicon Valley Bank could have significant implications for the tech industry and the financial markets, there are steps that companies can take to prepare for such an event and mitigate any potential negative impacts. It's important for companies to be proactive and stay vigilant in monitoring the financial landscape to ensure they can continue to grow and innovate regardless of any challenges that may arise. In addition to the steps that tech companies can take, there are also potential responses from regulators and policymakers in the event of a crash of Silicon Valley Bank. Regulators may step in to provide liquidity and support to the financial markets to prevent a wider crisis. For example, the Federal Reserve could provide emergency funding to other banks that are impacted by the crash or lower interest rates to encourage lending and stimulate the economy. Policymakers could also take steps to prevent a similar event from happening in the future. They could increase oversight and regulation of specialized banks like Silicon Valley Bank to ensure they are adequately capitalized and have appropriate risk management practices in place. Another potential response could be for policymakers to encourage the development of alternative financing options for tech companies. This could include initiatives to promote crowdfunding, venture capital, or other forms of alternative financing that are not dependent on traditional banks. Overall, a crash of Silicon Valley Bank could have significant implications for the tech industry and the financial markets. However, there are steps that tech companies can take to prepare for such an event and potential responses from regulators and policymakers to prevent a wider crisis and promote the development of alternative financing options. It's also worth noting that the tech industry has shown remarkable resilience in the face of past financial crises. For example, during the 2008 financial crisis, many tech companies were able to weather the storm and continue to grow and innovate. This is due in part to the fact that the tech industry is often driven by innovation and disruption, which can create new opportunities even in challenging times. However, it's important for tech companies to be aware of the potential risks and challenges associated with a crash of Silicon Valley Bank or other financial institutions. By taking proactive steps to prepare for potential disruptions and stay vigilant in monitoring the financial landscape, tech companies can continue to grow and thrive even in the face of adversity. Ultimately, the tech industry and the financial markets are complex and dynamic systems that are subject to a range of factors and influences. While a crash of Silicon Valley Bank could have significant implications for the industry and the economy as a whole, it's difficult to predict exactly what the consequences would be or how regulators and policymakers would respond. As such, it's important for tech companies to remain agile and adaptable, and to have contingency plans in place to respond to a range of scenarios.